Thank you for everyone who's made the time to be here. A warm Pacific greetings to everyone joining us today. My name is Yashna, and I have the pleasure of serving as your MC for this regional webinar on remittance policy, legal and regulatory frameworks in the Pacific, hosted by the Pacific Digital Economy Program, which is jointly implemented by UN Capital Development Fund, UN Development Program, and UN Trade and Development, supported by the governments of Australia, New Zealand, and the European Union. We are delighted to have participants joining from across the Pacific, Australia, New Zealand, and even beyond, including central banks, government agencies, development partners, financial service providers, remittance companies, mobile network operators, NGOs, and our wider technical community. Thank you for taking the time to be with us today. Today's session marks an important milestone. Over the past months, UNCDF has worked with an expert consultant to complete comprehensive remittance policy and regulatory diagnostics for Tonga, Samoa, Vanuatu, and a broader Pacific regional analysis. These diagnostics shed light on the barriers, risks, and opportunities shaping remittance markets that are absolutely critical for household well-being, financial inclusion, and resilience in our region. The webinar is an opportunity for us to share key findings and recommendations from the diagnostics, discuss reforms that can make remittance cheaper, safer, and more accessible, as well as an opportunity for us to hear from our regulators and industry leaders. A few housekeeping announcements before we begin. This session is being recorded, and the recording, as well as the slides, will be shared with all registered participants following the event. All microphones will remain muted during the formal presentations and panel discussions to avoid any background disruptions. We do encourage active participation. Please use the Q&A box at the bottom of your screen to submit the questions at the end of the presentation and panel discussions. We'll address your questions during the dedicated Q&A segment later in the program. And if you experience any technical issues, please try rejoining the session. And lastly, time management. We have a full packed 90-minute program, so we will keep transitions tight to ensure each segment flows smoothly. Thank you so much for helping us maintain a smooth and engaging session. Now, in introducing our event, remittances are a lifeline in many Pacific countries. Remittances play a significant role in household consumption, education, healthcare, and disaster resilience. Yet, Pacific remittance markets remain challenged by high costs, de-risking, limited competition, gaps in regulation, and low levels of digital uptake. UNCDF's diagnostics identify the core issues and, more importantly, the opportunities that lie ahead of us. Today, we will explore insights together, guided by our expert presenters and esteemed panelists from central banks and industry. With that, it is now my pleasure to invite Ms. Zoe Victoria Tate, Technical Specialist of the Pacific Digital Economy Program, to deliver the opening remarks and set the tone for today's discussion. Over to you, Zoe.
Thank you so much, Yashna, and warm greetings to everybody joining us today. On behalf of the Pacific Digital Economy Program, it is my pleasure to welcome you to this regional webinar on remittance policy, legal and regulatory frameworks in the Pacific. Thank you for making the time to engage with us today and to join us here today. So as mentioned, for many people in the Pacific, we know remittances are an economic lifeline, supporting household consumption, education, medical care, investment resilience during disasters. As some of you might know, in Tonga, they represent almost half of GDP. But also in Samoa and Vanuatu, they play a stabilizing role for families and for the wider economy. But despite their importance, Pacific remittance markets continue to face persistent challenges, including high costs for users, underutilized digital channels, tough market conditions, particularly for smaller operators, and regulatory frameworks that may not be fully equipped to support digital business models and cross-border interoperability. That is why UNCDF commissioned this regional diagnostic study across Tonga, Samoa, and Vanuatu. And over the past few months, our consultant, Ms. Paloma Monroy, has engaged with a wide variety of stakeholders to understand what barriers restrict market development, what risks affect system integrity and consumer protection, and also what opportunities exist to modernize remittances ecosystems in the Pacific. So today we are pleased to share these findings with you. And before I hand it over, I want to sincerely thank our speakers and panelists for joining us from the Central Bank of Samoa, the National Reserve Bank of Tonga, Digicel Pacific, and Vexco. And I also want to acknowledge and thank our consultant, Ms. Paloma Monroy, whose expertise and dedication have guided this body of work. And finally, thank you to all colleagues from UNCDF and UNDP for the support. Once again, I thank you all for being here, and I wish you a productive session today. Thank you.
So much, Zoe, for those insightful opening remarks. We will now move into our first session of the day, a presentation titled Barriers and Opportunities in the Pacific Island Countries Remittance Environment. This will be delivered by Ms. Paloma Monroy, policy specialist and a consultant for PDEP, who led the remittance diagnostics and brings a deep expertise in remittance market regulation, financial sector development, and inclusive digital finance. Paloma, the floor is yours.
Thank you so much, Jasna. Thank you also, Zoe, and good morning, everybody. So maybe, Jasna, you want to share the presentation and we can start going over the agenda so everybody knows what are we expecting in this session. So today, first, I will give, as Jasna mentioned, a brief presentation on the recent cross-border remittances policy diagnostics in the Pacific region, in Fiji, Samoa, Tonga, and Vanuatu, but also to the regional level to try to find economies of scale. Then I will moderate with our honorable speakers ongoing regulatory operational models that are taking place right now across the Pacific Island countries. And finally, we open the floor to questions from the audience. Please remember to include your questions in the chat, as I mentioned. And then finally, I will wrap up with this webinar with some closing remarks. Next slide, please. But before, let me introduce our speakers today. We welcome Tua Tomata from the Central Bank of Samoa. Tua is a senior analyst in the Financial System Development Department. He holds more than a decade of experience as a central banker in the areas of financial inclusion policies, national payment systems oversight, and other financial system developments. Welcome, Tua. We also welcome Daniel Tomapo, who serves as Assistant Governor for Policies at the National Reserve Bank of Tonga, focuses on analytical support and, more important, on the formulation of central bank policy. Daniel has over 20 years of experience in the banking and the finance sector. We also have Rupali Barbosa with us. Rupali serves as a compliance manager at Vexco, New Zealand, where she's responsible for managing comprehensive anti-money laundering and countering the finance of terrorism compliance and regulatory framework from New Zealand to more than 10 countries in the Pacific Inland countries. Rupali has over 10 years of experience in the banking and also in the compliance sector, which is an area very important for this session. And finally, let me introduce Anup Kumar. Anup is head of mobile financial services at Digicel Pacific. He's an operation leader in the Pacific with over 16 years of management experience in delivering business strategies with a background in operation, project, and risk management. He will show us now how is the regional focus that Digicel is implementing in the region. And well, I also introduce myself. My name is Paloma Monroy. I have more than 20 years of experience trying to foster in transparency, efficiency, and security in the international remittances markets. So next slide, please. So yeah, this is going to be, as mentioned, Jasna, In the past month, I've been supporting the Pacific Digital Economy Program in conducting these regional and national policy assessments, all of them based on best practices and developed by the international organization, but also based on the tools that the UNCDF has developed. These are free tools that anybody can use for trying to identify the gaps, the challenges, the barrier, but most important, the opportunities. Which opportunities are for development of the remittances payments, and these are the digital and technology agenda. This is going to be based on looking at the market aspects, payment system aspect, consumer protection, coordination, collaboration, but also on the regulatory framework. I want to thank all the central bank experts and representatives of the private sector for the generous engagement and also all his inputs. And this is a 360 exercise, and I couldn't have done it without you. So next slide, please. So basically, we're going to try to give a flavor of the key findings, the challenges, but also the opportunities. Pacific Inland countries are very unique and diverse, but also they share commonalities and challenges, and maybe they can work together in trying to find these economies of scales to foster the digital agenda in remittances. So let's start. Next slide, please. Let's start with the scale of remittances, the big number. So as you see in the slide, in 2024, 9 Pacific Inland countries, namely Fiji, Kiribati, Marshall Islands, Papua New Guinea, Samoa, Solomon Islands, Tonga, Tuvalu, and Vanuatu, received approximately 1.3 billion informal personal remittances. The vast majority of this money originates in the United States, Australia, and New Zealand. The economic impact of this 1.3 billion is profound and evident, as mentioned Zoe. Remittances are crucial sources of foreign exchange for the economies, but also for poverty reduction across the region and for many households. They also account for a significant percentage of GDP in many nations. Look at the deficit levels. Look at the bubbles. Tonga's economy is heavily reliant, with remittances accounting for 50%, half of the economy, half of the GDP. In Samoa is 26.4%, and Vanuatu is 12.5%. This is the lifeblood of many economies. If you look at the other economies, they're also remarkable. Fiji, 7.4% of the GDP. Solomon Islands, Kiribati, and Tuvalu, more than 4% of the GDP. So the remittances agenda is a big agenda for many of the regulators and authorities in those countries. Where are they coming, these flows? We say they're coming from Australia, New Zealand, and United States. This is clearly linked to migration, and particularly to the seasonal labor schemes in Australia and New Zealand. This is kind of very unique compared with other regions in the world. I mean, that the migration is kind of linked to these seasonal programs that then are implemented in Australia and New Zealand. And let's focus on the year 2023. Look at the numbers. If you see the percentage of a home country's working age population, who are people between 20 and 59 years, participating in these schemes, reach out double digits for Tonga, you can see 11.4, and Vanuatu, 11.5. This highlights the high degree of labor mobility and the direct pipeline feeding these remittance figures. Also, you can see that while Fiji, Solomon Islands, and Papua Guinea, the trend is less, but still kind of a major source of income for many Pacific households. And finally, let's focus on the chart that breaks down the actual volumes country by country. You can see that in 2024, while Tonga and Samoa show the highest percentage of GDP, you can see from the volumes that countries like Fiji, Vanuatu, and Solomon Islands are also major recipients. reflecting these large diasporas sending money back and the robust nature of these financial flows. So next one, please. We understand that the remittances costs are high. This is kind of the one of the things that everybody is aware of. Mainly, it's one of the highest in the world. Maybe also the Africa is also dealing with this big challenge. But you can see that in the Pacific Island countries, the cost of sending remittances is in average 9% of the transaction value. This average is more than the global average, which is 6.3%, or the United Nations Sustainable Development Goal target to reduce costs to less than 3% by 2030. We can see this is kind of really a dream. Still, comparing corridor by corridor, we see Fiji, who's been doing kind of more reduction in the cost, but we see still from the Australia to Vanuatu corridor, the cost of sending remittance is still reaching 11% in the fourth quarter of 2024. In the first quarter of 2025, costs in many corridors mainly consistently between 8% and 11%. What is the solution? The solution is digital remittances, and that holds the key. The path to achieving the SDG target is clear: digital adoption. Personally, I mean, you can see digital channels like online platforms, mobile money, remittances. If you see corridor by corridor, they cost less than 3%. This proves that the target of cheaper, efficient transfer can be achievable if we switch up to these digital channels. What is the call to action of the authorities, the private sector, and also international authorities? Regulators must prioritize policies and regulations that incentivize and promote these lower cost digital remittances methods. And this is kind of the target that we need to focus on. What is also the challenge? The progress is too slow. While costs have fallen, you can see that the situation in 2015, we're still having costs between 8 and 11%. We cannot do that for the Pacific Island country. We have to move faster. So next slide, please. The question is, why are costs so high to send to the Pacific Island country? We can see this is kind of a perfect storm of low competition, high reliance on cash, disproportionate regulation, which is driving up prices. Costs are falling, but not fast enough. So first we have the competition killer, which are the exclusivity agreements. What is the problem? The problem is that historically dominant money transfer operators have secured exclusivity agreements with local agents in the Pacific. This is locking out competition. This is kind of killing market and with no pressure to compete. Traditional money transfer operators are maintaining high transaction fees, passing the cost directly to the senders. Also, we are much aware that cash is king. We have this operational cost overload. What is the problem? That despite this shift to digital, cash remains the dominant method for sending and for receiving money across much the Pacific. We are much aware that sometimes the money is sent digitally, but then is immediately cashed out for everyday payments. And what is the impact? This is kind of increasing the operational and the logistical costs for remittances service providers. This is kind of highlighting the operational expenses are high and they have to be passed on the consumer as high fees. So next slide, please. And then we have the regulatory framework. The regulatory framework. This is the compliant cost issue. The problem, the anti-money laundering and the countering the financing of terrorism. These regulations are often applied inconsistently or without a proper risk-based approach to the remittances, to this small transfer, cross-border transfer person to person. What is the impact? The the small, low-risk remittances face the same high security, scrutiny, and compliance costs as large payments, high transfer. This lack of proportionality drives up money transfer operators and other providers compliance costs, and this is kind of something that Rupal is going to show us, which are then passed to the consumer. And then finally, the risking problem, very much aware in the Pacific region. So this high cost compliance environment is a major problem for the risking, where global banks close the corresponding banking relationships in the region. This is creating access. This is kind of restricting access to the formal financial system and sometimes to moving people to the informal channels. So next slide, please. This is like kind of in a screen trying to summarize the findings from the diagnostic. So what are the market dynamics in the Pacific Island countries? We see that the remittance market in the Pacific Island countries are served by various providers, namely banks, money transfer operators, one microfinance institution, and mobile money operators. However, despite this range of service providers, a small number of large money transfer operators dominate the remittances market. We know that banks have usually don't show interest in the retail remittances markets, have not look at these counter low-value cash-based remittances services, and they primarily provide business accounts to the money transfer operators, serving as a critical issue in this matter. But also we have to take into account that there are three banks, ANC, Bank of South Pacific, and Bread Bank, operating across the countries, which is kind of something that we can take into account for the economies of scale. Also, we have digitally money transfer operators, Digicel operating in Fiji, Samoa, Tonga, Vanuatu, Vodafone operating in Fiji, Kiribati, Samoa, Cook Islands, and Vanuatu, or recently ClickX, licensed in Samoa and Tonga. One player that also is creating me a lot of excitement is the South Pacific Business Development, which is a new player in the remittances arena. You are much very aware that this SPBD is providing services in Fiji, in Samoa, in Tonga, and the Solomon Islands. But the uniqueness is that the target is the empowering women and micro entrepreneurs by providing the financial services and loans. So they could be a very good player for trying to link the remittances to more added value finance and services. And then lately we have new entrants. We have the mHits or back-to-end network like TerraPay, who is a mobile wallet integration, partnering with ClickX and trying to provide more remittances. So this is kind of the market dynamics. On the financial infrastructure, we have the different level of developments. We have the some peaks have robust digital infrastructure. Others still rely heavily on cash or older technologies. But we have the Fiji, Samoa, Tonga, and Vanuatu have investment in implementing new brand national payment systems to facilitate electronic fund transfer. What is the problem? These are mainly could be the pipes for remittances, but also for trade and commerce. What is the problem? Interoperability and also the low use of these payment systems and in these countries. And finally, another finding is the legal and regulatory environment. So we see that across the peaks, the licensing for mobile provider is inconsistent and there are still gaps. For instance, some countries like Vanuatu, they're still lacking the regulatory framework for mobile financial services. And still they have to establish uniform payment regulation, particularly concerning licensing. And most of the countries have been licensing these providers under the Foreign Exchange Regulation, and now they are moving to the Payment Systems Act. So that's something that our speakers, we will talk about it later. So next slide, please. So this is in one also the main challenges that are shared across all the countries. Some countries are more advanced on financial inclusion, like Fiji. Some of them are less ahead, like Vanuatu, or small islands like Kiribati. But all of them, they're sharing these common challenges. The high cost, we already mentioned that we are behind on the target of less than 3%, unless we move to the digital. The regulatory gaps across the region. So as we mentioned, the licensing is inconsistent in some countries. Fintechs are licensed like foreign exchange dealers. In some other countries, they're licensed like under payment systems providers. And this consistency, there is needed a consistency to try to move ahead data areas like data privacy and consumer protection. Also, the high market concentration based on the exclusivity agreements. I think the authorities need to take a look to these, if these exclusivity agreements are hampering the development on the market, and take some action if so. We've seen in many other countries like South Africa or many other countries that removing the exclusivity agreements have reduced the cost. The loss of corresponding banking relationship. This is something that I'm very much aware, and then something that our speakers will talk about it. Just to mention, in the Pacific, according to the IMF, they have seen a 60% drop in the corresponding relations since 2011. So this is kind of something to take into account. Interoperability. Interoperability is a major constraint. The lack of connectivity or standards between the different national payment systems is something that they need to take from the beginning when they are developing the national payment systems. The lack of regional integration will make difficult to achieve the necessary economic scales to reduce the cost. So now they are implementing this new modern payment system. They need to take a lot of attention to the interoperability and maybe make it mandatory from the authorities. Another challenge is the weak agent. So that is something very important. How is the customer serving the last mile? So, I mean, cash is going to be there. So also the providers, they need to develop the agent network to serve the clients. And another one that is really important is the law adoption and use of digital remittances. This is kind of coming from the low digital remittance services tools, and also because people don't feel comfortable with these digital payment options. They don't still have the confidence to use them. And that's why we need to put a lot of focus on this. And finally, the limited availability of granular remittances data and also payments data. I think this is very important for policy making. We need data to try to develop policy action. And this is one of the things that maybe the central banks can connect with the subtext, trying to use technology also to capture better remittances. So next slide. So which are the opportunities? Opportunities are on the policy actions, trying to, as we mentioned, streamline regulation guidelines, also to leverage remittances for development. This is kind of an untapped area and agenda that is very important. I think that the authorities need to use the national, regional sandboxes to try to bring innovation, but especially in areas like remittances for insurance, for education, or for loans and credit. Also, it's important to protect the consumer. If the consumer is not protected, they're gonna get out of the financial system. And sometimes the remittances is the first touch point for them to use the financial services. So it is important for them to have mechanisms to protect, to readdress complaining, and also to transparency. I think mentioned before, I think regulatory imperative for interoperability. We need to move interoperability from competitive differentiation to a regulatory requirement. This is going to be the speed up accelerator for remittances in the Pacific. And again, also data protection frameworks is really also another area that all of them, they can work together. Cooperation and collaboration. In the Pacific Inland country, they have many years of working together, but some areas still they need to be developed, like a fintech and licensing criteria. And I think they can all together try to learn from each other, from Fiji, who is much ahead and showing their experiences to countries like Samoa, Tonga, Vanuatu. Improving financial inclusion literacy and particular strong public-private collaboration. They have to work together. This is something that they need to do. Finally, the industry can also do this part. I think for many years, I haven't seen any new partnerships in the arena, but in the last 2-3 years, I've seen the market is moving. We see now FEXCO having partnerships with Bread Bank to try to move the direct accounts of remittances in Fiji. We have also the microfinance working with Digital to provide loans to women. So I think the agenda Terapay working with ClickX. So we need this partnership. The banks also need to partnership with the digital providers. I think this is going to be the way, and this is coming from other regions. This is the way. Something really important: maximizing the product use. I think the industry needs to move to the immense and untapped opportunity to unlock the development potential of remittances by linking to other financial services, as I mentioned, insurance, loans, microloans, credit. This is an untapped opportunity. And education. I'm trying to conduct regional awareness campaigns. So this is some of the opportunities I had. Next slide, please, Yaka. And the last, and I would like to show 3 policy recommendations, which we found the high priority and could be addressed in the short term. First of all, try to work all together and trying to develop a collective fintech policy framework. What are you doing? And let's do it all together. This way, all the fintechs are going to feel confident and being able to operate in the Pacific Island countries. We have the Pacific Island Regional Initiative, a great tool for working on that, but also we have the national and Pacific regional regulatory sandboxes to do it. Another thing really important, a harmonized risk-based approach for cross-border remittances. This is the way to try to solve the problem they're risking, but also to try to reduce the operational cost for the providers. We have the World Bank is also implementing and helping a lot on the countries in this area. And third, the consistent consumer protection. I think it's important to align on the consistent regulatory guidelines for consumer protection. And I think AFI also, and the Alliance for Finance Inclusion, is helping the countries on this endeavor. These 3 areas could be moved the agenda completely to the new agenda in remittances. Next slide, please. So thank you. So now we are moving to our panel discussion. So I think this is after all the diagnostic and these constraint, challenge, and opportunities, I would like to show you the hands-on part of the Pacific Remittances webinar. I just presented on the diagnostic that clear there is a paradox. So we need this regulatory adaptation, but also we have this corresponding banking pressure. We have the privilege of have these speakers, 2 representatives of central banks, and also 2 representatives from the private sector, 1 international money transfer operator and 1 international, so mobile money operators. So I would like maybe to start with the Central Bank of Samoa and try to look at the experience of licensing payment systems provider and the guideline that the central bank have developed. So maybe Tua, I know that the Central Bank of Samoa is being modernizing the financial and payment system sector, as we see, particularly through initiative, the strategy on focusing on digital finance and financial inclusion. We know that you launched a regulatory sandbox brand new in 2024 to facilitate innovation, and also you are working on the regulatory. So my question to you is, how will the Central Bank of Samoa ensure successful transition from the regulatory sandbox, when it's kind of when the fintechs can test the innovation and can see if the services are going to be adapted to Samoa, to a full-scale operation?
Thank you, Paloma and Zalofa, and warm good morning greetings from the beautiful islands of Samoa. And thank you also to UNDP and for setting this call up and for the invite. I guess to set the scene, we understand that technology is constantly evolving, and regulators are always seen to be several steps behind in terms of regulations and policies that address innovative technologies. So to ensure that we do not hinder the potential and the benefits of innovations and fintechs, the Central Bank of Samoa took a proactive approach through launching its regulatory sandbox regime in late 2024 to allow fintechs and innovators to apply and test their financial service in the live market within control parameters. This approach gives two insights. It gives the fintechs and innovators an opportunity to assess the appetite or the demand for their product and its viability. And it also gives the regulator the opportunity to assess the associated risks and also the viability of the product. And through the live market testing, the central bank can assess any regulatory or policy gaps that needs either amendments or introduction of the new regulations or policies. But I guess to answer the question, we have not gone through the complete process. At the moment, we have one applicant currently in its assessment phase, but the idea is, and the requirements of the sandbox is that the applicants should have a exit strategy in place, so that after a successful testing, it should transition, use an exit strategy to transition along to full operations within the market. But then, of course, this is granted by the central bank, and through the testing, as mentioned, we would know if we need any amendments to the current regulatory space, or we require new regulations to be implemented. I guess in short, I think that's the answer to the question, Paloma. Thank you.
Thank you, Tua. Maybe also we move to the National Reserve Bank of Tonga, to Daniel. Also, on the licensing remittances service providers in Tonga is also evolving, with the National Reserve Bank of Tonga introducing a new brand 2025 Payment Systems and Services Bill. This is going to create a new framework for licensing, but also for oversight and regulation of payment systems providers. So specifically, the question to you, Daniel, is how will the National Reserve Bank of Tonga ensure that the new licensing and regulatory framework or requirements for payment service providers and remittances operators are proportional, meaning that they encourage the entry of new, small, innovative fintechs, especially those focused on digital payments, but also balancing the compliance barriers that only the small institution or the large institution can manage? How are you balancing this innovation with compliance?
Yeah, thank you very much for the question. Again, malo lele, and greetings from the islands of Tonga. We're very lucky here in Tonga to have very strong collaboration within the Pacific, especially with Samoa, Fiji, and those of our colleagues, other central banks. As you mentioned, we are currently waiting for an enactment of our payment services, payment systems and services bill, which would allow us to license new entrants to and fintech companies into the payment system area. And like Samoa and Fiji, we have also launched this year a regulatory fintech sandbox framework. And we are taking our learnings from Fiji and Samoa, for those of them that have worked successfully ran it, especially our colleagues from Fiji. We're bugging them all the time to see what they've learned through their process. So we are using the sandbox as well to see what kind of adaptations we can make, policies that we can adjust. Sort of like Netua already mentioned from the Central Bank of Samoa. We do believe in risk-based supervision. And this is something that we are pushing in not just for the money transfer operators, but also our banks and other financial institutions. And so we do, where necessary, create proportionate policies. I'll take, for example, some of our AML requirements that we've imposed on our financial institutions. We worked together in the previous year and this year with Digicel, their mobile money, and have agreed to give them tiered KYC agreements where we can have some simplified KYC for the lower customers, the less low valued customers, based on their risk assessments and things like that, and a more stringent one for the higher volume, higher value. So I mean, we really value our collaborations with the private sector and getting their feedback and things like that. And we do take that into account when we do create policies at the Reserve Bank, because ultimately what we want to do is not only, as you mentioned, promote financial stability, but more and more central banks now are highly involved in financial inclusion initiatives as well. So, then this is something that we do support, and we know with inclusion, and most times comes greater risks, but we are willing to listen, to learn, and we take advice from those who have been successful and incorporate into our policies as well. So thank you.
Thank you, Daniel. So maybe we move to the private sector. Rupali, I think you have something to say on compliance and cost. So maybe as a global money transfer operator that invests heavily in compliance, I think hundreds of millions annually, how do the specific AML CFT compliance requirements and the lack of regulatory harmonization across multiple Pacific Island countries, which I think you are covering all of them, translate into the high transaction cost passed to the Pacific customer? Can you maybe cite an example with a single regionally consistent regulatory standard will be a reduction on operational costs for the company? Can you provide more on this? Can you elaborate on this compliance and costs and how to do it regionally on harmonization?
Hello, everyone. Greetings from New Zealand. My name is Rupali Barbosa, and I represent Fexco Trading as #1 currency in the Pacific. A very good question, and I think it will relate back to the presentation you just did, Paloma. As a global, MTO in the Pacific, Pacific is one of the most compliance intensive regions. Not because of unique higher risks. It's because there are so many variations in the AML CFT regulations, reporting requirements, and of course, the supervisory expectations. So how do we look at it? So some of the examples are for us, not just being in New Zealand, Australia, but around 10 Pacific Islands, trying to look at each country, the KYC onboarding process, the reporting requirements, the identity, the ID, verification requirements. It's a long process in terms of, rolling out a new product or a service, making sure the AML compliance CFT rules are, always on top as a priority. So the example I can give you is the reporting requirements in the Pacific. Some require weekly, monthly reports. It might go to 3 different departments in the same, organization and the regulator. And we have the capability of maybe doing it online. But in the same case, there's another country where it's all a manual process. Which takes a lot of course, resources. My one compliance officer for the region is not going to be able to sit and do all the reporting, do monitoring, and of course, do training for the frontline staff. So without compromising AML CFT, we have to ensure that we are on top of it. How are we going to reduce the cost? I think it's having a standardized or harmonized expectation in terms of regulations. So, for example, a national ID across the Pacific, because that's one of the basic things that we have a challenge in. Not everyone has a passport or a driver's license. What happens to people who don't? I think Fexco has, over the years, worked tremendously hard, have spent a lot of effort and resources in ensuring that we educate the customers and the frontline staff in terms of how we can help our communities. Unfortunately, when we are doing the process, it does take a lot of time and cost. And although we try our level best in reducing it, the operational cost, sometimes we cannot. And so this would be a good example where we are sharing with the central banks and the reserve banks that you need to look at some platforms where there's a unique process of KYC. And, that's definitely going to help our communities who rely on money remittance.
Thank you, Rupali. Maybe I'm going to give the floor now to central banks to react. Maybe they can provide some on the new digital systems that are going to bring this universal ID to Samoa, Tonga. I don't know, any reactions from Tua, Daniel?
I think I can make a start, then I'll give it to Daniel. But totally agree with with the intervention there by Rupali. It is also one of the initiatives that is one of the major ones that Samoa is currently going through, which is the digital national ID, national digital ID. This is led by our Samoa Bureau of Statistics. They're working on incorporating a system and not only having a national ID available for all the Samoan citizen, but also have it made available in digitally. So to to give the opportunity for interoperability and so with other government services, especially, and also in the finance sector. So it's something that the Samoa government is also working on, is a national digital ID for all the Samoan citizens. Thank you.
Yeah, I echo, I mean, the sentiments. It is something very important, and Tonga has committed to it as part of the government, especially as part of their e-government development and initiatives. And this is something that they fully support, and we support. But I guess that the challenge for us, as to sort of alluded to, is making that data available to all, and making that available to financial service providers, digitals, things like that. And those are things that we are looking at the moment, and tweaking how we can utilize it, and get and combine all these various IDs and everything into one, and hopefully be able to to establish it, because it will definitely be easier as part of the digital development to have that ID in place, and for our KYC purposes, things like that. So yes, definitely something important. But there are some snags here and there that needs to be addressed, but we look forward to a fully functional one.
Maybe Anup, I don't know if you have any reaction on this, on maybe how much can save on compliances and operational costs having this universal ID or digital ID. I don't know anything else? Any reaction?
Yeah. Firstly, thank you, UNDP, and thank you everyone for joining in today. I represent Digicel, and specifically MyCash as the mobile wallet, and Bulavinaka from Fiji. I think we've probably touched a very important subject around the cost and the customer. How do we balance compliance and the customer access? I think as a financial service provider, I know NRBT has suggested about the PSP license. I mean, there's different forms of licenses we are operating in the markets that we operate in. But as a financial service provider, and operating under like a telecom giant of Telstra, and from a global oversight, compliance is key to us, and it's a core of everything we do: AML, CTF or CFT monitoring, KYC validation, TIN requirements, periodic reviews. The list goes on. But compliance should not be a barrier to the access. We take a risk-based approach, rigor where it matters, and I think simplicity where it helps the customer. That's probably the key tagline that we need to do. I mean, I think David or Daniel, I think, mentioned about the two-tier KYC requirements. Now, again, our enhanced KYC process, automated monitoring tools, integrations like TIN validation in Fiji helps us with a strong governance. But again, we are focused on ensuring customers, especially women, rural communities, and informal workers. That's where our key target is. How can we onboard them quickly? How can we confidently, without getting lost in the bureaucracy, get them using a digital financial system? And given that all the markets, all the Pacific Island countries are focused on getting financial inclusion improved, I think this is where we need to all work together from a private sector basis, from a regulatory perspective, and see what is the best practice and how do we implement that. I think this is where we need to all work together and it's all about getting customers into a digital financial economy and included, I would say.
Maybe, Anup, do you mind to elaborate a little bit on the, I think Digicel has implemented, as you mentioned before, an innovative two-tier KYC process for my cash, no? So you have a mini wallet, and then you have the full wallet, and how do you, I don't know, maybe in which countries are you doing, or which countries are regulatory barriers, or would you like maybe to have in these standards? I don't know. Can you please elaborate on these?
Yeah, and I think I'll probably take on from the lead from what Daniel was saying in Tonga. So basically, at the moment, our two-tier product is in Samoa and Tonga. So there's few things that we had looked at. Now, if I look at the traditional mobile wallet, or even a payment service provider or a financial service provider, the KYC requirements are very big, right? These days, even if you walk into a bank without a electricity bill or a water bill, you probably might not be able to open an account. Now, when we looked at the KYC requirements from a mobile wallet perspective, and especially MyCash, we said that these regulatory requirements has been there. It's a traditional thing. Then those things has been in existence, and that was the requirements. But if we want to increase financial inclusion in the market and have more digital financial inclusion and literacy, or digital financial inclusion in the market, then obviously we need to look at how we can onboard these customers. And hence the reason we took the initiative of going back to the central banks and said, these requirements have been traditional. It's been there for some time. I think we need a new approach to get more people on board. And hence the reason why we went into a tier 1 and a tier 2 approach, where customers with less documents, less requirements are part of a tier 1 group, which is, I would say, from a market perspective and from a customer base perspective, they would be using it because, yeah, they have got less requirements, but their thresholds are low and they should be using it. So that's where the thought process came in. Now, and hence the reason why I've got Samoa and Tonga as the two markets, or the two countries that are operating in a tier 1 and tier 2 perspective. Now, again, cost of moving from a tier 1 to tier 2, it's a manual process. We don't have like a digital registration process. We don't have a eKYC platform where we can move out people automatically from a tier 1 to a tier 2 stage.
Thank you, Anup. So maybe I think the ball now is back in the central banks. So Anup mentioned something really that all the countries have been working on, all of them are in the strategies on the central bank. We see some strength, financial inclusion, and financial literacy. I think all of the central banks they have in the strategies. So maybe, I don't know, Tua, that you can mention what specific measurable program is the Central Bank of Samoa leading or mandating to the commercial banks, money transfer operators, or the fintechs to strengthen digital and financial literacy among underserved groups, such as women, rural communities, to ensure that this new digital infrastructure translate into in the usage. Sometimes access is really important, but usage is kind of something that we have to also take into account. And also you can link it to remittances. As I mentioned, remittances is everybody is receiving remittances in 26% GDP. So what policy action is the Central Bank of Samoa doing in this endeavor?
Thank you, Paloma. So as you mentioned, so our financial inclusion agenda or drive is really under all of it is under our National Financial Inclusion Strategy, 2022-2026. And this is really a true stakeholder-driven approach. It's about bringing all the players in the market together and working together to drive financial inclusion in Samoa. So one of the main pillars of the financial inclusion strategy is on the digital financial services ecosystem, which involves working together, interoperability, and enhancing digital financial services. And also one of the other main pillar is the financial capability and consumer protection aspect of it. So through that pillar, we have technical working groups under the strategy working together to drive those pillars. And through the financial capability and consumer protection work, we were able to bring together all the players and the financial service providers and all the NGOs that are actually conducting financial literacy or digital financial literacy programs. We came together, did a mapping exercise under this technical working group, and first of all, we gathered data with regards to how many financial literacy programs are conducted around Samoa, and we're currently putting together a framework to actually have these financial literacy programs delivered in a more effective and cost saving approach that is beneficial for all the financial service providers. So it's part of our work under our National Financial Inclusion Strategy, and we're still working on the framework on how to better deliver financial literacy and digital financial literacy in Samoa. Thank you.
Maybe Daniel, any reaction, any policy actions that the National Reserve Bank of Tonga it's doing to strengthen digital and financial literacy among these underserved groups?
Yeah, I think it was we're taking sort of similar approach with Samoa as well through the establishment of national financial inclusion strategy working groups here in Tonga, which we include and have invited all the banks, so representatives from the banks, from Digicel, to be part of the technical working group, but as well as the policy working group that will be driving the policy. So those are things that we are supporting and running, but as well we as part of the PERI working group as well, we're very fortunate, as I said, that a lot of almost all the central bank governors are in accordance. They agree to a lot of these initiatives in driving greater financial inclusion. And part of the discussions we always have as well in that platform is sort of developing mobile money customer protection type policy, and see if that could be, as you sort of alluded to, and either harmonized or adapted to the Pacific or to each country. But those are things that we are looking into and that we are developing and hopefully can get some push and way forward that way.
Rupali and Anup, I don't know, based on your experience working as a remittance service providers, any action that you think in other countries that could be I don't know, to translate the access into usage? How can we activate the usage of digital financial services? Not just the access, the usage, which is sometimes, it's not only opening a wallet, it's that the people need to use it and link it to their everyday lives. So I don't know, Anup and Rupali, any reactions on this?
See, I think in the Pacific, cash is definitely going to be prevalent in terms of the local mom and dads who travel probably an hour just to get to the main city to get their weekly family support that the children would be sending. And the challenge that we find is it's not just having eKYC and stuff, but it's also to do with the expense for a common person in the Pacific having a smartphone. Do they have enough money to have a plan or, internet, Wi-Fi? What happens in the remote islands, wherein we have gone in, trying our level best and opening locations in the remote parts where there are no ATMs or banks. And that's where the cash part is still quite very important. So yes, there's going to be, we all require to work together in terms of how we're going to help the communities in the Pacific. Even eKYC, it's again going back to a standard ID and then a platform where we can do, because currently, even though you have digital, but you still need to do a face-to-face verification at least once because regulations state you have to. So, there needs to be step-by-step process by the central banks, by the private sector to ensure that but it needs to be quick as well, because you can't just go on saying we're going to do it and nothing happens. It's just going backwards again. People are still heavily relying on cash.
Thank you, Rupali.
Yeah,
Anup, any reactions?
Yeah, I think I'll probably add a few things in here. I think we need some products that will help develop the digital financial inclusion into the markets. Now, one of the things that we have done from a digital MyCash perspective is a micro merchant product. Now, again, if I look at a normal merchant, and this is where the central banks have supported us, is we were opening merchant accounts, which were the bigger supermarkets, the SME type of with the full KYC requirements. Now, again, we saw that this is a challenge in the markets. So what we did is, again, we got approval from the central banks, and again, central bank supported us with this. We've got all these market vendors, taxi operators, as our micro merchant, and they are able to accept digital payments through their QR payments. Now, so from a Pacific Islander perspective, I know cash is one of the important things. People feel that they need to have cash in the wallet, but if we have enablers like you go to the market, you go to a roadside store or roadside vendor to buy vegetables, to buy barbecue or something like in the night after you're a bit drunk, then you have the wallet. You can always QR scan and pay for all these things. And even to the extent that we have made this acceptance of these micro merchants payments free. We don't charge any fee to these micro merchants, and they are able to spend that whatever comes into the wallet, and they can use it. So I think all in all, we need to put everyone together, all the key stakeholders, and we need to find more of these kind of enablers, so that when people are able to, we create a use case, or we create reasons to use, then people will start using it.
So I hear, Daniel, you raised your hand?
Yeah, if I may add, I think
Sure.
we're talking about remittances, and thank you, Anup, for bringing up that valuable point about having use cases in the digital space. If we have use cases that people need, people will tend to use the digital platform. We've seen also the increase in-kind remittances for which means the diasporas in New Zealand or families in Australia directly pay for the groceries, and rather than the recipients here picking up the cash, they go directly to the supermarkets and pick up the goods or the in-kind. But one of the main you mentioned cash is king, and cash is king for reasons. It's not only use cases, but it's also a cultural thing with family. We call family is here in church applications, family applications, church applications. Those tend to normally be used in cash. They deal with cash. When we have family funerals, we have birthdays and those sort of things. It's hard to transition those to digital means, because we're so, even church donations, it's hard to have a POS in front of the church to donate money to the pastor. You tend to use cash. So it's those cultural and church agendas that it's hard to manipulate and transition to the digital space. And mind you, that's where most of the remittances come from also. It's for family obligations, or falabilavis, as we call it in Samoa, or church donations. I think that's one of the main key issues that we need to, no, I won't say issue, but that's the main bridge that we need to transition over. And it's really hard to transition those cash basis type things to digital. I think I thought I might add that in.
Daniel, do you have anything to add, or?
Yeah, no, I was just going to say, I mean, in addition to the cultural concerns we in the Pacific, I don't think we'll ever go cashless. Of course, cash is king, and it will be around. But at the same time, we can still promote a digital, more use of digital financial services, and it is and I think one of the concerns or barriers is just trust and financial literacy of the people, of the products. And this is something that we, through discussions with our, financial institutions, that the Reserve Bank has taken note of it, and we are sort of moving towards collaborating with them on financial literacy programs. So we're happy to participate in, and providing more exposure and things like that about products that we've supported, so that people can trust. If it's central banks are typically a trustable organization. So if something, the Reserve Bank as well is supporting something, I think people would participate. I think that we were, as far as church donations and things like that. We were floating an idea here, but I was told it's already been done. So I am hoping there will be more. When we have weddings and things like that, the Tongans love throwing cash as part of the program. But we had floated the idea to some of the financial institutions and the private sectors to, instead of throwing cash, maybe have a big TV. So when they do the dance, and you just do the transfers digitally and make it come up live on the TV and says, "Oh, this person," because that's what people want to see, is that how much money somebody has given, and that's why they prefer the cash, because they could see the cash. But if you can have a big TV and just say, do your transfer, your QR code, and transfer and blow it up on the TV, and it might catch on, and people might take it up and say they've improved and developed. But I mean, things that we're thinking about as part of financial literacy and promotion and development and things like that. And I just wanted to share that.
I agree that the cash is not going to disappear, clearly. But I think one of the main pieces that maybe we haven't crossed that bridge is interoperability, no? Doesn't matter you have a wallet in Digicel or account in Bread Bank. I mean, that you're going to be able to send your money, even though cash is going to represent, I think, the main constraint which is not constraint, opportunity. Let's see opportunity. I think if all the countries try to move and make a priority that interoperability, I mean, things are gonna change. So I don't know if the central banks would like to show with a specific mandatory regulatory actions are doing to achieve full cross-platform interoperability, and maybe then the private sector can show what is the experience on that. I mean, what is needed, what is next in the next year. So we have beautiful systems, payment systems. They have to use it. So interoperability is going to make the difference. So I don't know, Daniel or Tua, do you want to?
Yeah, if I could add here, I think this is we have noted that as one of the main things that we are addressing, and this is something we are in a project currently with that is being funded by the World Bank, well, that supported by the World Bank on developing the national payment system, but the whole idea is to develop a platform, whereas in that where all payment services or payment systems can be linked to, and so that it can be interoperable to address the interoperability concern that any type of service can come through this platform and be transferred out and be with all the banks or digital mobile money, cash, and things like that. And that is something that we are highly aware of as a barrier, and that is one of the main reasons why we started developing the bill, because it started out as a national payment system to try and address the concern of interoperability. And then, because that would lead to inclusion and things like that. So, I mean, yes, highly aware of it, and something that we are looking to address.
I don't know, somebody, I mean, we're kind of maybe we would like 5 more minutes, and then we open to the audience also, because I'm really excited with this conversation. So, Tua, do you want to jump in?
Yeah, just quickly adding on, I think you mentioned we launched our Samoa automated transfer system in 2023, and we recently activated our instant funds transfer component of the system in June this year. And that component makes the interbank transfers available 24/7. And that provides a great opportunity for, so right now the only participants are the commercial banks and the government, but we're gradually working towards introducing mobile money providers as well. I think in the next 2 years, through the system, through indirect participants. I think Fiji is already leading at this point, because they already introduced mobile money providers into their system. We're working on doing the same thing, and that solves the interoperability parts, where a customer can send money from a bank account to another customer who has a mobile money, and even between mobile money providers. Yeah, and we stand by that interoperability is a strong approach to having a digital adoption, and through digital adoption, we will have a great strive through in financial inclusion as well. So we have a lot of work on our hands in building on the Samoa automated transfer system, and we hope to have full interoperability where all the financial service providers can be connected through the system as indirect participants through the commercial banks.
So very quickly, I don't know, Rupali or Anup, and then we open the floor to the audience.
Yeah, I think we probably, I mean, to summarize it, I think we are heading into the right direction, but we're still maturing digitally. I think we just have to make sure that the regulations are evolving. They need to continuously change. The challenge for us is to keep the pace, and with the regulatory shifts, I think it's across all the Pacific Island countries. We need to just work together to make sure that we are all evolving and moving in that pace as well.
Thank you. So maybe just now we open the floor to the audience for questions. I don't know if somebody has a question for the panelists or based on the presentation. Now is your time to pick up. Over to you, Jessica.
Yes, thank you so much, Paloma, and the panelists for such a rich, thought-provoking conversations. I guess this is just one of those times where the conversation just keeps flowing. When you feel like you're at the end of it, another idea just comes in. We'll now, like you said, open the floor for questions. We have 4 questions right now in the Q&A box. We can start with this first one. On the use of cash in traditional and church obligations, it's all about the use of digital payments. In Fiji, those obligations are changing now due to the mass use of digital payments. It's all about how big the regular day-to-day payment, which would bring change in the traditional payments. Thank you so much for that comment. A question asked in regards to the presentation is, did you collect any median cost data during the research for this project? I think, Paloma, maybe that one would be for you.
Oh, okay. Thank you, John. I'm pretty much aware that let me see. No, John has 2 questions. So we base our research in basically on the remittances price database of this on the World Bank, which shows the main services. And you're right, the diaspora and labor mobility workers are generally aware of these new digital remittances providers. The thing is the question is maybe you're going to be more because you're working a lot on the digital financial literacy is if they're using it. I think the services are there. The thing is they need to start using them. So maybe campaigns on the sending sites are really a good recommendation through the consulates or through community awareness campaigns or also the websites like the Send Money to Pacific, which is also showing with us the cheapest and the fastest service. So thank you so much, John, for the question. Also,
this next one, I believe, would be for Tua. For the Samoa National Digital ID Initiative, does it address eKYC requirements for banks? And additionally, what is the approach for rolling out national ID to onboard citizens? Could you clarify whether onboarding is mandatory or voluntary? Lastly, has the legislation for the Samoa National ID been enacted?
Thank you for that. So, yep, the national ID legislation have been enacted. I think it was last year, 2024. So the current work is on developing the system. This is under the full project is called the Samoa Financial Sector Resilience Program, funded by the World Bank. And one of the components of that project is the national ID, which is led by our Samoa Bureau of Statistics. So they're leading the work. We don't have the information right now on how they're going to roll out the system. At the moment, I think they're just working on issuing EOIs for the project manager. And I think later on, then the whole system, the EOI for the system as well. But apologies, but we don't have the information with us with regards to how they plan to roll out the national ID. And I think on the mandatory, I think it is mandatory, but I can confirm later on with regards to the legislation. I'm sorry, I'm not fully fledged with the the act, but I think it is mandatory for all the citizens to have that unique ID. But I think the biometrics is only mandatory for, I think it's either 18 years old or and above. Yeah, so to answer that question. Thank you.
Yeah, thank you so much for that. The next one, I think it's a follow-up question. It says, might it help if merchants were offered rewards or incentives if a set portion of payments they received were via digital payment channels?
Yep, I think that's a question for Anup. Anup, do you have any?
No, I think yes, agree. I mean, as I had mentioned, with the micro merchants, it's free. People are able to do QR scans at a micro merchant level. The reason why we said it's free is that this mom and pop shops sells ice blocks. They sell. I mean, if you look at market vendors, they sell cabbage, and if they're getting $1 for a cabbage, and we charge 30 cents to them, then what is left with them? So from a reward and incentive perspective, we have done it free. It's something that Digicel is actually proud of it. And it's I think one of those things that will help the economy. Agree, we can probably look at other incentive programs for the bigger ones, but they make a lot of money. So we are also a profit-making organization, so we have to think about it as well.
For that, Anup. The next question is, have considerations been placed on attracting the next big players in money remittance, such as Wise and Revolut, to the Pacific to provide more competition and drive down the costs to consumers?
Yes, we are working on new remittance partners. We definitely are looking at different things. I know Rupali might get angry if we say that we are working on the other big partners as well, because they also do remittance. But yeah, definitely we are working on a lot of different partners to put them on board. And I think one of the key things that we are also doing, and the recent launch of a RIA money transfer, the cash out option, is also now available at Digicel outlets. So yeah, we said mobile wallet is one, but we can also help the community by providing the cash out options from different money remittance partners as well.
Another one just came in. This one is, what does digital IDs solve? For context, the failure of customers to produce IDs isn't why remittance cost is high and speed is low. Majority of Pacific Islanders that is above voting age have an ID. Perhaps Daniel or Tua would like to take this question, or maybe even Paloma.
I think I can make it a start. So the ID, the three pillars of financial inclusion or access to financial services is access, usage, and quality of financial services. Access is one of the most important ones. So in order to access financial services, you need to comply with the ML and KYC know your customer legislations. And in order to access those financial services, you need identification, and that's where the national identification comes in. It's a requirement for people to actually access the financial services, such as remittances. We noted the comments around the cost, but in order for you to actually access financial services, you need some form of formal identification, and a national one solves that. I think I'll add that. I'll let the others.
Yeah, if I can just add, maybe it, just how you would want. I mean that as far as cost implication, that the reason we want to go digitally and accept more to reduce cost, right? We're trying to attract greater fintech companies and things like that would that use their digital platforms to reduce the cost of remittances. Now, in order to go digitally, it'll be you would need a digital ID to be included in that system. So I think that's just how you would need a manual ID when you go and do manual payments. A lot of these tech would require so that we can easily do KYC and things like that. It'll help if you have the digital EIDs as well. So I mean that's.
Thank you both for those responses. We'll take one last question before we close off. I see that we're a couple minutes over the time limit. So maybe we will do, wouldn't lowering KYC requirements for unbanked and lower income earners to encourage more participation in digital payments increase the risk of them being exploited by fraudsters and scammers? What are your thoughts?
I'll probably start before the regulators come in. I think we've seen an uptake of the lower KYC requirements and the uptake of the product itself in the Samoa and Tonga market. Now, again, if we look at the risk and the opportunity, as I had mentioned earlier, I think we just have to make sure that the balance is there between the compliance risk and also the customer impact. So whilst we have opened it up for the lower KYC, we've also looked at the threshold and we've lowered that limit so that the risk is lowered as well.
Would anyone else like to add to that response?
Yeah, I think as any changes to policies does have its risks. But as we mentioned, we want to lean more towards risk-based supervision. And when you're talking about smaller valued type customers, the $50, the $100, I don't know if you want to put the same type of requirements to those who will be dealing in $2,000 and because fraudsters and are more likely to use the bigger values because nobody wants to scam me of $5 or $10. They want to scam me of 1,000 or 2,000 type. And but of course, yes, the possibility is there that they can do multiple of the lower valued ones, and then we would have processes for that, and that's when the financial intelligence unit and things would be doing their job in that side of things. But we're willing to take that job ourselves rather than imposing it on others, so that we can sort of have that balance between development and regulations and supervision.
Thank you so much for that. If there's no other responses to that question, I think we can start wrapping up. For all of the questions and comments, thank you so much to all of the attendees. For anything that we haven't been able to answer, if you have any more burning questions that you'd like our panelists to answer, I'll keep the chat box open for 5 more minutes after we close everything off. And we will coordinate with them, get you a response, and reply via email. With that, thank you so much for the excellent engagement, the questions, the responses. And as we approach the end of today's event, I'd like to invite Paloma to give us the closing remarks.
Thank you, Jasna. So yeah, we have reached the end of this. Has been a truly insightful discussion. Maybe 3 key takeaways. Again, we summarize the points. First, the role of the regulators. I think we heard that central banks have been actively updating the regulatory frameworks, and also investing in regulatory sandboxes and digital universal IDs and crucial payment infrastructure. What is maybe a recommendation ahead? Challenges are consumer protection, data protections, and maybe financial literacy of the consumers. So try to push on these frameworks. What else? Also, partnerships and collaboration. Regulators are proactive, creating a clear runway for digital innovation, but also the private sector must continue to partner with other players, but ensuring security and compliance. So the future is try to work together and bring more partnerships. And the three, it's maybe from the private sector, the biggest barrier to the reducing fees and increasing access was the compliance, no, and sometimes inconsistencies across the Pacific countries. So maybe trying to bring aligned licensing and trying to bring a risk-based approach and KYC standards to reduce these operational costs and more providers into the arena, more fintechs like that they were mentioning. So thank you so much to our panel, our esteemed panelists, and our audience for your engagement. We look forward to seeing these insights translate into actions across the region, and have a great day.
Yes. Just to reiterate, thank you so much to all of the speakers and panelists. Thank you, Paloma. Thank you to our audience. And on behalf of UNCDF and UNDP, thank you so much for your time, your contribution, your insights. And we wish you a wonderful day ahead. Thank you.
Thank you.
Thanks, everyone.
Merry Christmas, everyone.
Merry Christmas. Happy holidays.
Merry Christmas.